We're back on Morning Movers. The U.S. District Court will hear closing arguments today in the remedies phase of Google's antitrust trial. 9 months ago, a federal judge ruled that Google's search is an illegal monopoly in the search engine market. DOJ is arguing the judge should force the sale of Google's Chrome browser. With that, time now for Options Corner. Joining us to take a deeper look at Alphabet Google is Rick Ducat, lead a market technician. All right, so let's talk about this chart, Rick, and the trends you're paying attention to, especially given some of the weakness it's seen so far this year.
Google, underperforming the broader market and its own communications sector, not the tech sector, as you might assume at first here, but down about, less than 1% on the year, almost flat here. But that happens as the broader market is up about 13%. So if we were to look a little more closely at our chart for Google here, we can see that we have shifted from a downward sloping channel to an upward sloping channel. We can see that it began here with our gap down shortly after those all-time highs. We bottomed out here during our tariff news cycle when everything was introduced. Now we are crossing above our moving averages. Once again, the faster moving averages are starting to outpace the slower ones. But even more importantly, you can see here that we had a small gap and then a subsequent high at this red line near 170. So far, we have broken above that area and held on. The old resistance has become new support. Now we have this smaller, shorter term white channel to consider going forward.
Okay, and then what kind of options activity did you see in this yesterday, or what are you noticing when it comes to volume?
Well, looking at the June 20th option expiration series, we can see that the 180 calls are by far the most notable area of interest there. So we can see that 180 is right about up here, but on the way to that region, we would have to work through this volume node that we can see on our volume profile here. This is an area of particularly heavy trading near 175. So it could be an important area for the bulls to watch out for. In terms of further support, our moving average confluence lines up with our volume profile point of control right around the 165 level. So another noteworthy area.
And then, Rick, what's an example trade that you would, or how would you approach this from an example trade perspective?
So considering that idea of the 180 calls in June being by far the highest open interest area, the example trade that we considered today would be an unbalanced butterfly. So this particular trade would be buying the 175 call, selling 2 of the 180 calls, and buying 1 of the 182.5 calls. You can see it gives us this shape that at first glance, might look kind of like a call vertical almost, but you can see that it tops out here near that 180 strike. That's our 2 short strikes. Then it declines a little bit and levels off. So if the stock were to go down, our max loss would be the $1 debit paid. If it were to go up, we would have our max profit area, $400 at that peak here near the 180 level. And if it were to make a move beyond that 180 level here, we would level out and we would keep a $150 profit here, even if it were to go beyond that area, Diane.
Okay, thank you, Rick. That's our Rick Ducat, lead market technician with an example trade for Alphabet Google. It's a call butterfly for the example trade.